So Nouriel Roubini was asked this question. If 10-year and 30-year rates go up 100 basis points, how will that affect the housing market? Could the 30-year rate affect anything more important? And he answered, well, if inflation is higher and nominal yields are higher, okay, a nominal interest rate refers to the interest rate before taking inflation into account. So you will not only have losses on your fixed income of a 60 to 40 allocation, but also losses on the equity component, and you're going to also have some increase in mortgage rates, and it may lead to a correction and slowdown in the housing market. And then he went on to cite the example of what just happened just a few weeks ago in September of this year. Okay, using the example of that time. Bond yields went higher because people were worried about inflation, and when the Fed will start tapering, the yield didn't go up that much. According to him, it was only about 22 basis points. So we have instances of that. You know, the Financial Times and the CNBC, they reported that you can see government bond yields rise as traders react to hawkish signals. Global bond downturn pushed US Treasury yields to highest level in 3 months on Monday, the 27th of September 2021, as investors reacted to the prospect of a possible higher interest rates. Okay, and then CNBC, they went on to report the following day, the 28th of September, that the benchmark 10-year US Treasury yield rose again on that Tuesday, trading at its highest level since June of 2021, and continuing a steady increase. So given that 22% increase or something like that, or yeah, the S&P corrected by 5% as a result of that move higher by bond yields. The Nasdaq corrected even more because it's more of growth stocks that are long duration assets that are sensitive to interest rates. And there was also a correction in public REITs that are proxies for real estates. So certainly, according to him, a sharp increase in bond yields will not only damage fixed income assets, but also risky assets, including equities. Yes, equities are risky assets, and also some portions of the housing market. So that certainly is a risk to a variety of asset prices. So we have also heard recently, as recent as just yesterday, the 24th, or rather 25th of, just maybe today, I think, today the 25th of September, we heard Bob Kendall of the Kendall Report, a YouTube channel. We heard him say that his fear is not the US debt ceiling. It is that nobody shows up at a debt auction. He indicated that typically you get 2 to 3 coverage on certain auctions, but if they start getting to under 2 or 1 to 1, then that will be the most scary of events. It may lead to some crazy spike or movement towards 175 and 186 basis points for the 10-year yield. So to get an idea of what this basis points means, you can compute the basis points as a percentage by multiplying the basis points by 0.0001. As such, we have the 175 multiplied by 0.0001 will give you 0.0175. As such, the decimal and percentage equivalent of a 175 basis points will be 0.0175 or 1.75%. So the 186 basis points will be a 1.86%. So that's in a nutshell what he answered in that question. Okay, so thank you very much for watching.